Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USD CAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be speaking about the order flow, so what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is trapped in between support and resistance. In fact, we clearly have a range here, with the top of the range being this resistance from which all these rejections to the downside were created, and the bottom here of the range being this support from which all these rejections to the upside were created. So until the market here will remain in between these two levels, we could expect to see more horizontal price action within these borders. However, we can also notice that we have a middle level of support. In fact, here we have this minor level of previous monthly resistance from which this red candle was created, which then the market broke to the upside, and at that point that previous resistance was turned support here. So as the market is testing and rejecting this previous monthly resistance turned support, there is definitely the possibility of seeing more potential bullish price action being created away from this level. So the monthly time frame does seem quite bullish, and there is a possibility of a push higher for the test of the high of the range. So here on the monthly situation is clear. Let's drop down on the weekly time frame. Well, from a weekly perspective, the situation appears quite clear as well, with the market having quite important structure at this level. In fact, this zone was acting as previous weekly resistance preceding all these rejections to the downside, which then the market broke to the upside, and at that point all that previous resistance was turned support here. The market tested it as previous weekly resistance turned support, and now already started rejecting it to the upside. So from a weekly perspective, everything seems quite bullish, and there is definitely the possibility of seeing more potential bullish price action being created away from this level. We can also notice that from a weekly perspective, as we have this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have a perfect 0.618 Fibonacci retracement lining up precisely with this previous resistance turn support, therefore creating confluence of support in this area. And when you have a confluence of support zone, there is increased probability of seeing institutional longing because you have multiple layers of support lining up in the same area of price. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. But before we do that, for now, let's drop down on the daily time frame and see what we have. Well, from a daily perspective, first of all, I did speak about USD CAD just a few days ago when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside, which in fact is exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, at the moment, with the creation of this push higher, the market has created new structure. In fact, this area here, which was the previous level of daily resistance from which these rejections to the downside were created, has now been broken to the upside. So all this previous resistance is now turned support, and we could expect a potential test of this previous resistance turned support and then a rejection to the upside away from this level. We can also notice that after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements lining up exactly in this horizontal level of support, which creates confluence of support, which increases the probability of seeing institutional longing. Now, let's go and see what we have when it comes to the commitment of traders. So what are actually institutions doing in this area? Well, if we look at the data for the CAD, as for the other pairs, we have to keep in mind that we are already looking at CAD USD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively dropping. We went from having minus 63.2k net positions all the way down to minus 91.6k net positions. So we have seen a massive decrease of the net positioning, making the CAD quite weak. And a weak CAD makes USD CAD stronger, because if institutions are shorting the CAD, in order to do that, they are essentially longing USD CAD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here in the daily time frame, in a situation like this, what could I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if this market would shift from an intraday bearish to bullish market during this test of this confluence of support, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.